Hey, good morning. This is Mayor Valensky with Driving Markets. I hope you're well. Okay, so wow, what a day yesterday. It was unbelievably fast. Fast market, very volatile. The VIX shot up to nearly 30, which shows extreme volatility. And what was behind it all? Behind it all was the fear of recession. The fact that the central banks are now warning the markets that we're going to have to raise interest rates aggressively and significantly. And we're talking about 50 basis points. Some are even talking about 75 basis points. Yes, there is now a view amongst banks, amongst investment banks, that the central banks, the Fed, the UK and Europe need to raise interest rates by 75 basis points in order to combat inflation. We're in a situation now going all the way back to the 70s where inflation is absolutely rampant. Let me give you some ideas of where we're at. So CPI, which is a consumer price index, is a measure of a narrow band of goods, a basket of goods, but does not include many things that households spend money on. For example, doesn't include pet care. It doesn't include sports gear. You know, sports gear has gone up more than 100% in the last 2 months. You go to any shop and you look at the price of a training or top or shoes or shorts, it's gone up more than 100% in the last 2 months. All this is hidden underlying inflation that's not fed through to the actual released numbers by the institutes or the governments when it comes to demonstrating where inflation is at. Okay. That's a bit regarding inflation, and that's put a lot of fear into the marketplace. Therefore, the markets went down yesterday on the back of fears of recession. If we go into recession, then corporate earnings will be affected and will be damaged. Let's look what happened. And one of those significant factors yesterday was Tesla. Now, Tesla's a bit complicated. Tesla went down over 11% yesterday, which knocked off $100 billion in value, and that's $250 billion in value since the 4th of April. Now, Tesla's a great company producing significant profit growth on growth, quarter on quarter. But why did it go down so much? Why did it go down? Because Elon Musk has now agreed to buy out Twitter on a private sale. So they're going to take Twitter off the market and going to make it a private company. And the banks are concerned that in order to finance that deal, he will have to sell more Tesla shares than necessary. He does have bank finance and he does have to sell some Tesla shares, but that knocked Tesla on the back of that Twitter sale. However, if Tesla goes down to around about the 720, 750 level, it looks like a pretty good buy at that level. So keep an eye on Twitter. What else happened yesterday? Interestingly, the 10-year bond, the yield on the 10-year bond dropped to 2.77. Why did it drop 2.77? Because when there is panic in the marketplace and investors are dumping their shares and dumping their investments, they're looking for a safe haven where to put their money. So what do? They go and buy bonds. And therefore, by buying the bond, the price rises and the yield drops. Therefore, a lot of investors went into bonds yesterday and caused the yield to drop. The way yield dropped, not on the back of good economic numbers, purely on the back of demand of those bonds. So bonds were down yesterday. The markets were down yesterday. Even oil went down during the day, but bounced a little bit back over to $100 a barrel. And also cryptos were down yesterday. Let's just cover those particular areas. As regards cryptos, Bitcoin was down to $37,500 a share. I think it's going to I think it's going to go down to around about the 32,000 level. So keep an eye on that. At that level, it's got major support. I did say a couple of weeks ago that Bitcoin will likely float down to around about the 32,000 level and drag some other currencies with it. Keep an eye also on Dogecoin. Dogecoin is a big favorite of Elon Musk and has moved up a little bit. And once he takes over Twitter, he will probably then get involved more in Dogecoin, whatever you want to call it, and therefore that is a crypto to watch going forward. As regards foreign exchange, the dollar is so strong that the pound has been completely thrashed in financial markets. It's down to 125.70 against the dollar. You've got the pound euro is down, pound yen is down, and the reason behind that, because economists believe that the UK is going to go into recession maybe first than all the countries. That's why the pound has been thrashed and the pound has been completely crushed in financial markets. So therefore, you've got to look at where the pound is likely to go from here. I think it's probably got very, very good support. The 124 level may go all the way down to 122. Who knows? But I'm a big fan of the pound. I'm very disappointed that's not managed to hold itself and it's just stuck there. So that's something also to keep an eye on. Also, you've got other things to look at regarding the Nasdaq and regarding the tech stocks. Yesterday, semiconductors also were pushed down and they dropped significantly because the Nasdaq is a high risk index and the components of the Nasdaq are high risk investments. So you will see more blood on the streets from the Nasdaq as fear of recession increases and as rates rise. This is Mayor Valensky with Driving Markets. You can like the videos, you can subscribe, you can comment on LinkedIn, comment on the videos, Instagram, WhatsApp, YouTube. Let's get together, let's make it happen. Have a good day.